Okay, I think we'll get started. Good morning, everyone. I'm Alan Friedman, and it's good to have all of you here, and we're especially pleased to have with us the Minister, just back from Washington, and I know you're all keen to hear what he has to say. We're also pleased to have with us Mr. Kamath, the President of the CII, as well as ICICI, and Rick Levin, President of Yale University. This is, if we can ask the photographers if they want to finish up and then give us a bit of serenity. That would be great. Let's thank the photographers and ask them to conclude their good work. Thank you very much, gentlemen. We're going to have a debate now. These are historic times for India and for the world, and we are all keen to examine in today's plenary session the risks, and I might add opportunities, if that doesn't sound paradoxical, to India's economy and for India's economy in the post-crisis world. And we'll be asking ourselves this morning, what are the policies, what are the likely structural impacts, and how resilient India's economy will be at a time of global recession, or let's alter that and say at a time of US-caused and US-led global recession. The government's view on the global financial crisis is what we're here for, but we're also here to listen to the CII's view on what they think the government should be doing and what they are going to be doing to help India, Inc. The backdrop is that we've just seen the conclusion of a historic meeting in Washington, historic not necessarily just in terms of substance, and perhaps less so in terms of substance and more in terms of the fact that this was the first time that India, China, Brazil, Saudi Arabia, and other members of the G20 got together, and instead of simply being present for a photo opportunity, actually were involved in substance and in contributing to the agenda setting. These are the plate tectonic movements of global finance that we're seeing before our eyes, and although it's a time of crisis, my prediction is that this past weekend's meeting will lead to next summer's meeting in Sardinia, with Mr. Berlusconi presiding what used to be the G8 and what will become the G15 or the G20, as India and other countries finally are recognized, and finally the global directorate of the world economy is no longer a group of 8 countries representing half of the GDP of the world, but a group of 15 or 20 countries representing more than 3/4 of the world economy. This comes at a time of volatility in markets, effects on the real economy, and India will not escape the global economic outlook. And we're here today to take a look at the growth of 8 or 9% in 2007, 7.5% this year, and its likely 2009 outlook. Even though I'm interested to see that in the April to September period, there was $17 billion of FDI still flowing into India. That may change. We'll hear about that in the course of today's meeting. I'd like to start by asking the Minister to comment on the G20 meetings, on India's policies in the current period. We could say, Mr. Minister, that there's been more change in the world economy in the last 60 days than in the last 60 years. Maybe future historians will come to see that. Over to you, sir. Your views on India's role in the world economy, and a word on the G20 meetings you've just returned from, please.
Thank you, Mr. Friedman, Mr. Kamath, President of CII, Mr. Richard Levin, if you will pardon a Harvardian view, the President of the other good university in the United States, friends. It's true that the world economy has changed more rapidly in the last 60 days than it has over a long time. But this is not the first time in which industrialized countries are going into a recession. There have been recessions in the past, in Japan, in Europe, in the United States. This recession, of course, threatens to be a longer and deeper recession affecting more industrialized countries. And we in India are experiencing the spillover effects of what's happening in the advanced countries. It's been said before, but I think it bears repetition. We are not the cause of the problem, but we are being invited to be part of the solution to the problem. I have been asked to speak for about 10 minutes on the risks to India's economy in a post-crisis world. I'm glad that the title recognizes there is a post-crisis and that the crisis will end someday. We must take note of the structure of India's economy and the manner in which most Indians live and work. About 60 to 65% of India's population and workforce depends on agriculture. And as I speak today, agriculture continues to grow at a robust pace. If I can give you some numbers about what we expect for the Rabi crop, which is the main agricultural crop in India. In terms of sown area, wheat, we've already sown 2.69 million hectares as against last year's 2.19 million hectares on the corresponding date. Maize, 232,000 hectares as against 177,000 hectares last year. Jowar, 4.19 million hectares as against 3.59 million hectares last year. Pulses, that is lentils, 6.6 million hectares as against 5.5 million hectares last year. Oil seeds, 6.05 million hectares as against 4.34 million hectares last year. In fact, the total sown area has increased very significantly this year. The monsoon has been good. Farmers are busy with their work. They don't look at the Sensex or the Nifty every day. And we will have a very substantial bumper crop. Okay, let's moving on to the services sector. The services sector in India is driven by millions of small and medium enterprises. They are facing some liquidity problems, but we are determined to ensure that they are provided adequate liquidity so that they can carry on their work and their business until we tide over this crisis. The section that is affected is industry, especially large manufacturing industry, and of course the financial sector. our mind space is occupied by the financial sector and industry. Newspapers are full of the problems faced by the financial sector and industry because it's people from these sectors who are readers of the newspapers and who advertise in the newspapers. The media naturally focuses on industry and the financial sector. These sectors indeed face problems. But we are extremely vigilant. We have been proactive. In fact, in the last 60 days, both government and the RBI have moved swiftly to take steps that will ensure adequate liquidity is provided to industry. But as I've said previously, liquidity alone is not enough. Providing liquidity is only the first step. The second is ensuring the appropriate price. And the third step is ensuring that at that price, credit is actually delivered to industry. And I think these are not insuperable problems. These are not insurmountable problems. While world output will decline and to that extent affect our exports, affect some capital inflows, affect external credit, we must be able to quickly substitute or compensate for that by stimulating domestic demand and providing liquidity in the domestic market. Now the CMIE, the think tank, captures data on investments. And this is what they say. Inflation, rising cost of capital, and fears of a global economic slowdown have not reduced the enthusiasm among Indian corporates to set up fresh capacities or expand existing ones. This is well captured in the data collected by CMIE. We captured 557 new projects in September 2008 quarter, adding 5,02,812 crore. A crore is 100 million rupees of investments. This is the third largest quarterly investments captured in India's history. While 557 new projects have been captured in the quarter ending September 2008, 48 projects have been completed in this quarter, and CMIE also notes that 45 projects have been shelved. So I think what we need now is to deal with each problem as it arises, anticipate the problem, deal with it by using sound economic principles and a certain amount of courage and confidence. What I find is the language that you speak and what is being written, while there is a slowdown, what does the slowdown in India mean? As I speak to you, the lowest estimate of any think tank in India is 7% growth. Now, why is 7% growth a matter for wearing sackcloth and ashes? If the world output will grow by about 2%, that is still 3 times the world's growth. There will be a slowdown, but I think the steps that we have taken and that we will take, can to a large extent compensate for the factors that are causing the slowdown. And I'm confident that we'll end this year with a very satisfactory growth rate. Now, I can't put a number on the final growth rate. The IMF's estimate made last week places it at 7.8%. Many think tanks have said between 7 and 7.5. RBI has said 7.5 to 8. If either Mr. Friedman or Mr. Levin or Mr. Kamath can tell me that the worst is over for the world, then I can confidently predict what the growth rate will be. But let us assume that for another month or two there will be a further bad news. even then we will grow at a satisfactory growth rate. And next year we'll bounce back to a much better growth rate. What is required now is confidence, courage, and taking the steps that are necessary to compensate for the ill effects of a world slowdown. Now, specifically, what will happen to our exports? Yes, it's likely that our exports will dip. We may not reach the 200 billion US dollars. But that was what was said last year also. Eventually, we reached the target last year. We will be close to the target, but we can compensate for that by stimulating domestic consumption. On capital flows, yes, we have already witnessed some outflows as a result of FIIs facing redemption pressures back home, but we are compensating that. The World Bank has promised to substantially increase development assistance to India. We are looking to multilateral regional banks for more funds to flow into India. And we have relaxed the conditions under which Indian industry can raise capital abroad, both debt and equity. And I think a number of companies have in the last 10 days raised ECB abroad at very attractive rates. So we can compensate for that by allowing our companies to raise capital abroad. On a depreciating rupee, the rupee has depreciated because the dollar has shown extraordinarily strong performance. It's ironical that money is flowing back to the country where the crisis originated. But that's a complaint which I've heard from every finance minister in the world. There is pressure on the rupee, but once the flows reverse, as we believe it will, FCNR and NR rates have been revised, ECBs have been liberalized. Once the flows begin to come into India, it's quite possible that the rupee will climb upwards. At the moment, there is huge demand for dollar, mainly coming from oil companies and others who have to meet some payment obligations. But it's quite possible that in about a month or two, the direction of flows can reverse. As Mr. Friedman pointed out, FDIs are still very strong, and the rupee will settle at an appropriate level. But I think what is important is not to be focused on the Sensex or the Nifty every day. If you look at that, you suddenly feel you've become poorer. You have not become poorer or richer. This is simply an index which points to the estimate of investors of the potential of that company or that sector in the future. But that one number should not determine all our actions. It should not determine what we'll have for breakfast. It should not determine whether we'll go to the gym or not. It should not determine whether we'll take a walk in the park. That's a number. But there are many other numbers which I think make up for the totality of India's economy. As I pointed out, agriculture is robust. We will ensure that the services sector, dominated largely by SMEs, is provided adequate liquidity so that they can carry on their business. And we will take steps to stimulate the domestic economy to compensate for the downsides caused by a downturn in the world economy. At the end of the year, Mr. Friedman, Mr. Levin and friends, at the end of the year, you will find that India has returned a very satisfactory, decent growth rate given world conditions. And next year, I'm confident we'll bounce back. Thank you.
Encouraging words from Mr. Chidambaram. I'm going to avail myself of Chairman's prerogative, and if I may, sir, just ask you perhaps 10 questions over the next 10, 15 minutes, and perhaps just drill down a little bit into some of these important issues. It stands out, however, two things stand out that you said. One, don't get caught up in the daily headlines, because that is the way panics and manias in markets are fostered when people focus on the day-to-day and the short term rather than the longer term. And to your comments on agriculture, which after all still is life for about 600 million Indians. But let's come to those in a moment, and let me ask you to reflect on your trip to Washington. Did it feel like India was at the top table in a more serious way for the first time?
Well, the G20 has been meeting regularly for the last 10 years, but the G7 has dominated the international scene. Now, 4 or 5 of us used to be invited for breakfast by the G7, most expensive breakfast we've had, flying to London and flying to Washington. But I think the G7 has recognized belatedly that the G7 alone does not have the solution to the problems, that unless they engage the emerging economies and the growth centers in the world, there is no solution to the world's problem. I think the G20 has come to stay. That's my takeaway from Washington. The G20 has come to stay as the single most important forum to address the financial and economic issues of the world. Now, while I'm generally happy with the G20 declaration, and I'm very happy with the action plan, I have 2 concerns. My first concern is that the G20 in Washington could not agree on some kind of global oversight of the implementation of the action plan. My worry is when we get back in March for each country to report what action it has taken. Now, if we find that a few have not taken adequate action, we would have lost very valuable time. I would have liked a global oversight mechanism, not a global regulator, just a global oversight mechanism to ensure that national regulators and national authorities are implementing the action plan between now and March 31. My second regret is that this has come at a time when there is a change of government in the United States. It's not quite clear to us, although President Bush had some reassuring words, it's not quite clear to us whether the incoming administration is fully on board to what the outgoing administration has put on the table. It would have been reassuring if, or it can still be done, if the incoming administration quickly states that it is on board, that it will be closely engaged with the outgoing administration, and that post-January 20, the incoming administration will quickly take charge of the G20 process. But otherwise, I think it's a good beginning. We are happy. The emerging economies are happy. On the sidelines of Sao Paulo, the BRICS met, the Brazil, India, China, Russia, South Africa met, and we are coordinating our actions to the extent possible. We are happy with the way the G20 is working out, but we'll have to wait and see what they report in March.
Just to follow up on that briefly, global oversight. Do you feel, irrespective of whether the new Treasury Secretary and your counterpart is Larry Summers or Tim Geithner, or whoever Mr. Obama decides to appoint, do you feel that the Obama administration will be, based on what Mr. Obama has already said, more open to global oversight and a more multilateral approach to the world financial as well as political issues than the current administration?
Well, I don't know. See, when I say global oversight, let me explain. I'm not talking about a global regulator. In the current context, that's not possible. Regulation must be at the national level. National regulators, national governments would be loath to give up the powers of regulation. What I have in mind as global oversight is a few wise men and women, without a reference to their nationalities or countries they represent, who can take a global view, a half a dozen global citizens, world citizens, who can take a larger view of what's happening and then report to the G20 periodically, that this is the progress that we find in the advanced countries. This is the progress we find in Europe. This is the progress we find in the developing countries. This is where some regulators are lagging. That kind of independent oversight by half a dozen men and women, I think, will help. And given what I have read about President-elect Obama, I see no reason why he should be averse to that idea. I think he has a much larger view of the world than President Bush, and therefore I think he should agree to this global oversight.
Okay, now you've given me the answer I was looking for. I was going to follow up and ask you if you hope that President Obama will be more open to this, but I think you've given us your answer. Do you see the G20 replacing the G8 as from next summer's summit in Sardinia?
Well, I don't know if the G20 will replace the G7. I can't stop the G7 from meeting if they wish to. But I think the G20 will become the most important forum to address world economic issues. Like G7, like the BRICS, like ASEAN, like the Latin American countries, everyone can give an input, and the G7, of course, will give a very important input. But I think G20 will become the most important forum to address economic issues of the world.
And would you say the G20 for the 21st century is a more representative body of the world GDP than the G7?
Well, it is, although there's some feeling that Europe is overrepresented and Africa is grossly underrepresented. But if you try to make changes in the G20 now, I think we'll spend a lot of time in subtraction and addition. It's much better that we get along with what we have today. And as we go along, we think Africa is underrepresented. There's only South Africa there. And there's a feeling that Europe is overrepresented. But that's okay. G20 is a much better forum than G7.
Okay, before we ask you a few questions specifically about economic policies and the Indian economy, you did stress agriculture before,
yes,
sir. So I'm going to come back to you on agriculture and ask you an unplanned question. Why is it, given that the leading challenge for lifting people out of poverty in your agricultural sector is irrigation and water in this country, that your Ministry of Agriculture has been so inefficient in spending billions of dollars targeted at irrigation and unsuccessful because of bureaucratic delays in Delhi in getting money to farmers and getting agriculture infrastructure for water and irrigation improved?
Well, I'm not so sure I agree with you when you say agriculture is inefficient in this country. So agriculture is a state subject. The center provides money, helps in nationwide projects and programs, but ultimately agriculture is a matter which concerns the state government. Now, we have among the highest yields in wheat, cotton, coffee, rubber in many parts of India. Take the distinction between Punjab, Haryana, and Bihar. Now, Bihar's soil is as fertile as Punjab's. Bihar has as much water as Punjab has, at least on the Gangetic plain. Yet the yield difference between Punjab and Bihar is huge. Now, if we can grow as much wheat per hectare in Bihar as we do in Punjab, we'll become a major exporter of wheat. There are differences between states. There are differences within the state. Take, for example, tea. Now, tea is a very successful plantation crop in South India. But in Bengal and parts of Assam, not so much Assam, but Bengal, because of the governance issues there, because of the way the trade union and labor issues are dealt with, the tea industry in Bengal has gone into a downspin. We have outlaid very, very large amounts of money for irrigation and for water harvesting and watershed management. but the vast, the greater proportion of the land in India is still rain-fed. There's enough precipitation in India. What we don't do is gather the water, collect the water, harvest the water, so that agriculture can have a better, a more assured source of water and irrigation. The difference, if you ask me, the difference is how does the state government approach agriculture? If the state government takes agriculture seriously, as for example Punjab, Haryana have done, and now recently a couple of other states have done, agriculture has a very bright future and farmers can look forward to a high degree of prosperity. The Punjab farmer is quite prosperous. The Haryana farmer is very prosperous. But the Bihar farmer is poor, although his holdings are higher. Therefore, I think this is a question of governance. And unless governance improves at the state level, I'm afraid these differences will remain in a country like India.
Issues at the state level. Good. Thank you. You met with, moving to the central issues of macroeconomic policy and finance, you met with the Prime Minister and with Kamath and with Montek and with the RBI Governor yesterday, I believe. And you had a high-level policy discussion. We've seen bits of that. Could you summarize in your own words, what would you say are the three most important messages you wish to convey to the Indian business community and the international community here today from that meeting? What you're going to do?
Well, firstly, I want the Indian business community to know that the Prime Minister and his team are on the job 24/7. We are not relaxing our vigil. We are not going by the textbook. We are not clinging to past policies or positions. We have a completely open mind, and we are willing to address the problems as they arise. In fact, we are willing to anticipate the problems and take preemptive action. The fact that the Prime Minister, within hours of returning from Washington and on the eve of President Mubarak's visit, was able to find an hour and a half to call his first meeting of the Apex Group shows his determination and commitment to address the issue. The second is that the problems are not insurmountable. The problems are easily identified, and there are solutions to these problems. Liquidity, price, credit delivery, these are the issues. And if it helps, I want to tell you, I'm meeting with the Governor again at 10:30, and I've invited Mr. Kamath to join us at the end of the meeting at about 11:15 to get a business and outsiders' input into that meeting. These are issues we have identified, and we can address these issues. Thirdly, we are looking at it sectorally also. What does the export sector require? What does steel require? What does textile require? What does housing and construction require? What do SMEs require? What do NBFCs require? NBFCs are part of our financial system. We can't wish them away. What do mutual funds require? We are looking at it sectorally. There is an officers group chaired by the Finance Secretary which has already met 6 times since it was set up. And we are willing to look at it sectorally. We're willing to address the sectoral issues also. All I ask in return is, there are enough people to spread gloom and doom. Don't join that bandwagon. Just have your chin up. We can tide over this period of 6 months, 9 months, I don't know, maybe 12 months. By the end of 12 months, we'll be back to the normal growth rate that we would like to have. There's no reason to spread gloom and doom. There are negatives, but there are positives. We should emphasize the positive and send out a message of confidence and our ability to overcome this crisis.
That's a fascinating sequence of meetings you have in the next hour or two. You're here with us now, then you and the Governor, then Mr. Kamath joins you. Mr. Kamath has suggested, I believe in the last day or so, that he would like to see the RBI cut rates by 200 to 300 basis points further, and echoing comments by business leaders and by economists in most of the developed and developing world, from Washington to Berlin to Kuala Lumpur, all over the world, everyone's in the rate-cutting business these days. Would you agree with Mr. Kamath that that's the right move, about 200 to 300 more basis points, Mr. Minister? I'm asking the question of Mr. Minister, not of you, Mr. Kamath. I'm asking the Minister if he agrees with you. It's a trick question.
What is the question? Do you agree that the rates must be cut by 200 to 300 basis points? Is that the question?
Do you agree with Mr. Kamath's suggestion that rates should come down
I'm glad I don't
200 to
have to
300?
do that. There's someone else to do that. He's called the Governor of the RBI.
Okay. That's the question. That's the answer I would expect from a finance minister. Let me ask the follow-up then, Mr. Minister. Do you believe that rates should come, it would be good for the Indian economy if rates trend downward in the coming weeks and months? Easier question.
It'll be good if rates tend down, but we must also keep in mind that we haven't quite licked the inflation issue. Until about 8 or 9 months ago, when inflation was high and rising, people told us that we were ruining India's economy by allowing inflation to get out of hand, and they were ridiculing our concern about growth. Today, they have changed their positions. They are telling us we are ruining India's economy by not giving attention to growth, and are ridiculing our concern about inflation. That's the luxury if you sit on the other side of the aisle. But if you sit in government, you have to be concerned both about inflation and growth. And I think the Indian government has, after delivering 4 years of 9% growth with moderate inflation, in the 5th year, I think we have done a good job of balancing growth and inflation. And I think we will continue to balance between growth and inflation. But clearly, the bias now is in favor of stimulating growth.
Okay. But you did say you'd favor, it would be good for the Indian economy if rates trended downward. I heard that. The other thing Mr. Kamath has called for is a cut in excise duty. Do you agree? It's a yes-no question.
We have cut excise duties. We did cut it in the beginning of this year. We brought it down from 16 to 14%. If any sector faces special problems, and if cut in excise duty will stimulate that sector, certainly I'm open to examining that suggestion.
Is the headline there, Minister is open to cut in excise duty, or Minister gives politicians answer?
I said I'm open to examining the suggestion.
That's a great answer. Mr. Kamath, the Minister has called for price cuts by India Inc. rather than cuts in production by India Inc., which he has termed wrong, unquote. Your response?
To that before he responds. Yes. The classic response to a demand slowdown is to cut prices. That's a much better option than allowing inventories to build up, your account to become an NPA, layoffs, retrenchments, and digging a deeper hole for yourself. The profit and loss account will take a hit, but it's much better to keep your market share, keep your product in the market, keep your loyal workers with you by taking a price. Hotels must cut tariffs, airlines must cut prices, real estate must cut prices of homes and apartments they sell. Car makers, two-wheeler makers must cut prices. The classic response to a demand slowdown is to cut prices for a short term.
Got the message, Mr. Kamath?
I agree entirely with what the Honorable Finance Minister said. And price cuts will happen for a very simple reason. One is to compete and survive in the marketplace. And B, if you look at the input cost structure, with what has happened to fuel, what has happened to commodities, everything that goes into your cost of production side, and the efficiency that the system has built up over the last 1 year, I think this is going to happen. So price cuts will be an initiative that industry will take.
And what about the minister's statement that it would be wrong to cut production?
Yeah, I guess that the initial knee-jerk reaction is to cut production, and that has happened. And that has happened, say, starting from the mother industry, say steel, when they find that nobody was picking anything from the yard at all. And that was consequent to the dramatic fall that took place in the price of that commodity. Nobody knew where the next fall would be. So the buyer was not prepared to buy. But that again to me is a 4 to 6 week adjustment process. Within 4 to 6 weeks you will find data. You will find where is it that this is going to stop. And then whether it is in terms of adjustment of price or marginal cut in production, but I'm sure the price would have adjusted to a level where demand will come back. Production cuts will be only to the extent that final demand has slackened for a variety of reasons. But I don't think it will be dramatic to the extent that what was 100 suddenly becomes 40 or 30. Because 100 could become 95 because of an adjustment in the demand side. The rest of it has to be made up in terms of appropriate pricing. So it will have to be on the price side. I entirely agree with the minister.
Okay. And without prejudging the contents of the private conversation you're going to have with the minister and the governor about 90 minutes from now, Mr. Kamath, are you satisfied with the minister's answer to your call for a cut of 200 to 300 basis points? Did you like his answer?
No, I will actually answer it on a wider context, and I think it's necessary for everyone to understand and know what the government has been doing. The minister said that they have been prepared on a 24/7 basis, and I have heard it from the Prime Minister. He has said that. And it's not just he's saying it. They have acted on a 24/7 basis, acting as necessary. Now, we may say that why wasn't a big measure taken, across the board once for all? I think everybody is learning through this process. Everybody is learning through this process. I think the other aspect of, in the Indian context, I want to put that before we go on to this answer, is that we are making do with what we have. So, for example, if there is a liquidity situation, we can ease liquidity because that liquidity has been held back as a conservative measure. We are just easing that back. So to that extent, it's a significant difference from what is happening in the West, A. B, people are talking of foreign currency crisis. There's no foreign currency crisis in India. It is in our hands to determine how much we want to ease foreign currency because we have these large flows in terms of our NRIs remitting money back to India as savings or for consumption expenditure. Now, if we increase the rate of interest on these savings, we get all the money that we want. And today's paper says on a net basis, flows last month were $500 million. I think it's easy to take that flow to $5 billion by adjusting price maybe by another 0.5% or 0.75%. I'm sure if needed, we will work on this basis. So my own assessment is that A, yes, liquidity has to be appropriate in the system, and B, the price of credit has to be appropriate. And I think this is where at this point in time, bankers are also struggling to find out where is the balance. Given that indeed there has been, I would say, a sudden loss of confidence in industry. And that loss of confidence in industry, as the minister rightly said, is unwarranted. And we need to find where is it that we need to really, what is it that we really need to worry about? And beyond that, we need to get our, I would say, courage back.
Having said that, do you still think that over whatever the time period, months, weeks, months, that significant drops in the interest rate in this country would be good for industry and therefore for job creation?
I would think that a significant drop in interest rate is required, and I've been an advocate of that, and I know the minister also has been an advocate of that, and I think the minister probably feels that we are not, as bankers, acted fast enough. I think there is a question of supply and demand out there. It's more a question of supply than demand, which is, I think, constraining bankers from pricing, let us say, deposits down. But that will get resolved in the next, I would think, in a couple of weeks as confidence builds up even at that level. So 2 to 3%, why is it 2 to 3%? I think 2 to 3% is required to kickstart again the consumption from the lay user. For example, the mortgage that was mentioned by the minister. For that mortgage to become affordable, I think the rate has to be just about 10% or below 10%. But today, 13.5%, to me, it is not a tenable rate for the borrower. Similarly, for whether it's a car manufacturer or a motorcycle manufacturer, for his customers, rates need to drop by 3 to 4%. I think that is what we are looking for which deposit rates need to move down. So this cycle, I think, we need to now kickstart. It will get kickstarted. So I don't think anybody is saying drop rates tomorrow by 3%. That's not going to happen. But drop rates over a period, certainly it is going to happen.
Yeah. It's worth putting this in global context. In the US and in Britain, for example, which are facing, I think the minister would agree, more of a deflationary risk than an inflationary risk at this stage, or potentially, the dramatic Bank of England cuts have been perhaps more necessary given the deflationary risks over there, which is a different macroeconomic perspective than here. And if one wanted to look at equally dramatic rate cuts that are still needed, one would look to the European Central Bank, where Mr. Trichet has been rather cautious, but where he's expected to act further as well. Whereas in a developing, emerging market economy, there are slightly more complex issues than in the US and UK potential deflationary risk. What do you think of that, Mr. Minister?
Thrust of your question. What is your
question? The question is, would you say that where there is a greater deflationary risk, as in the US and Britain in particular, the hardest hit economies in the world by the current recession and crisis, there is a greater need for faster and more dramatic rate cuts than in emerging markets, which will suffer but not as much as the hardest hit?
That's right. If you are facing a recession, you will make dramatic and faster rate cuts. We are not facing a recession. And I find this word recession has been used indiscriminately and thoughtlessly. Just to put the record straight, a recession means 2 successive quarters of contraction. Now, we have not had anything like that, and we're not going to have anything like that this year or next year or the year after. Just to answer on this home loan rate, banks, public sector banks and some private sector banks have reduced their prime lending rate by 75 basis points and have extended it to home loans as well as car loans. Now, as I see the psychology of a buyer of a home, world over and in India, when I buy a car, I assume that the price of the car, the value of the car will depreciate. When I buy a home, I assume that the value of the house will appreciate. Today, at current prices of homes, flats and apartments, that assurance is not there. People think that because of the uncertainty, prices will not appreciate. Therefore, he's not willing to borrow to buy that home. Therefore, while banks are ready and willing to lend to home loan borrowers, there's no borrower at this price. Let me make it very clear. Speaking for public sector banks, they have assured me that they are ready and willing to vastly expand loans to homes, to car buyers, to two-wheeler buyers. But this can only take off if prices are cut for flats, apartments, cars, and two-wheelers. You cut prices, you will find there's an immediate stimulus to the housing sector and to the automobile sector.
A clearer quid pro quo between the finance minister and the CII there could not be. But Rick Levin, president of Yale, which has just announced one of the most extensive, perhaps the most extensive study program on India in the world, an American or an international perspective on what you're hearing here, please.
Well, I'd like to start by proposing a derivative transaction. I think America should propose to sell an option on the next Treasury Secretary in exchange for Mr. Chidambaram. If only we had seen, now granted Mr. Chidambaram has the benefit of 3 or 4 months of ability to observe what's happened in the West. But if only we had attacked this crisis starting in about June or July with the same clarity that he exhibited today, for example, by recognizing you have to deal with simultaneously liquidity, pricing, and the delivery of credit, we would not be in the trouble. It would not have gone as deep. We started thinking all we had to do was deal with price by cutting interest rates. We subsequently thought we had to deal with liquidity, and by the time we got around to that, by proposing the purchase of bad paper from the banks, there already was a solvency problem in the financial sector, so liquidity wasn't enough, and it took weeks for Secretary Paulson to recognize what most economists saw at the moment he proposed his unlikely scheme of buying bad paper, that the banks needed recapitalization in a time of rapid deleveraging, at least as much as they needed liquidity. And then finally, credit delivery has been only attacked in a very piecemeal fashion and inadequately. Even now, the credit markets are frozen for most industrial companies. Its credit liquidity's gotten better. Credit has opened up a bit for the banking sector, but still the industrial sector is in significant trouble. You know, we needed a coordinated approach. We only got to the beginnings of a coordinated approach when Gordon Brown told us what to do. So it's been I would say the record of U.S. Policy over the last few months has been nothing short of disastrous. Now, that's not to say there wasn't going to be pain. There had to be deleveraging from a hugely over-leveraged economy, and deleveraging can't be free, but the policy has been very poorly coordinated. I think that the only thing I would question about what Mr. Chidambaram has said so far is I agree that India is very, very much insulated. It has strong domestic demand. It has a large part of its economy that's insulated from domestic demand. I think realistically, though, you don't need to worry that much about inflation with the rest of the world deflating, and with commodity prices falling and with oil prices falling, you could be more aggressive about stimulating domestic demand to keep your growth rate robust. Even that said, the decline in what's happening in the rest of the world I wouldn't be surprised to see the growth rate in India drop to 5% or 4%, but it certainly won't go to 0 or negative the way that it will in Western Europe and the United States.
Okay, you've raised two really interesting points. Let me take the last one first from Mr. Chidambaram. He said 4 or 5%. The official forecasts are more like for 2009, 6 to 6.5%, or is that not official? Do you have a forecast for
We don't
2009?
yet have a forecast for 2009-10, but IMF's forecast for 2009-10 for India is 6.3%.
Okay, so that's your statement. And did I understand you, Professor, correctly, Rick, that you would term the Bush administration's handling and Secretary Paulson's handling of things in the last 6 months or a few months erratic, incoherent, and ham-fisted?
That's a pretty simple way of saying it, yes.
We could add incompetent. Do you have more hopes that Tim Geithner or Larry Summers or somebody else who's more pragmatic will do better in future?
Yes, I do, actually. I think that, it's a little hard to understand why the reaction was so slow. I actually think ideology played a significant role in it. When it was clear the banks needed recapitalization, I think the initial resistance and the whole idea behind the bailout through buying bad paper was probably motivated by just an ideological aversion to nationalization, to taking equity as a government. This is just not in the U.S., way of thinking about situations like this.
Or hasn't been since FDR.
It hasn't been for a long, long time.
Yeah.
So, but I think Geithner or Summers or Michael Bloomberg or any number of potential Treasury secretaries.
Almost anyone could do better.
Would get this right.
Yeah. Almost anyone. The minister has to go in 5 minutes, I believe, but I'd just like to ask Rick Levin one more question and then ask you to comment on it. Actually, two more for Rick. The Bush ideology of, let's call it excessive deregulation, or the Wild West, or the enrich your cronies, from Dick Cheney's friends to the oil industry to whoever at Halliburton is around. How much did that let them not just be laissez-faire in a free market environment, but let's fleece and loot this economy while we're in office approach by the Bush administration contribute to the subprime crisis and everything else?
I think you're being a little too harsh.
I'm being provocative, but
Yeah. And remember, Bush inherited Alan Greenspan. He didn't appoint him. And Alan Greenspan is probably the bigger villain of this piece than Bush.
how come people don't know that Alan Greenspan was wrapped up in a criminal investigation of the SNL scandal in the 80s of the Keating Five before being named to the Fed? They forget that.
You really are trying to provoke me. But
Yes, it's my job.
I guess I would accept your point that excessive deregulation and the failure to notice that new areas of the economy were emerging that needed some kind of oversight, like all the off-balance sheet financing that banks were engaged in, that needed closer oversight. That was the failure, and the failure to recognize that the housing bubble was that the Fed needs to worry about asset price bubbles. It's not, even though it's not explicitly part of its mandate, it ought to at least take account of them. Greenspan was very lax about all this, and he created, in a very significant way, this mess.
Okay, I'm going to ask one more question of the minister who has to go, and then ask Mr. Kamath and yourself to stay for another 10 minutes to carry on after the minister's gone. India's position in the global economy, Mr. Minister, until this crisis, most economists were assuming that by about 2030, give or take 5 years, the U.S. economy would be overtaken in absolute GDP terms by China. Whether it's 2030 or 2035 is academic. But at some point in the 21st century, in the next couple of decades, there'd be this China number 1, U.S. number 2, India number 3 in absolute terms, and then various Asian and European countries along the way. To what extent do you feel that the current situation, through no fault of anyone, accelerates the process in which India's relative importance in the world economy has accelerated itself?
Well, I think you're being too uncharitable to the United States. The United States is a powerful economic engine. And the main reason is the United States, and particularly its universities and laboratories, attract the best and the most innovative minds from all over the world. As long as the US retains its advantage of its ability to attract the best minds of the world, the US will still remain a major engine of growth. I think we are writing off the US too quickly. I think the US will still remain the world's largest and most dominant economy for the next 20 or 30 years. It's possible that in purchasing power parity terms, we will overtake the US, or China will overtake the US sooner. But I think the US will still remain, thanks to its ability to attract talent, it will still remain a very powerful economic engine.
No, as an economist, I agree with you, sir. I'm an American. I wouldn't wish to write off my own country. I simply meant to imply that since November 4th, I've been proud to be an American again.
I'm proud to represent what you've just characterized as the leading sector of the American economy, too, which is America's university.
Mr. Minister, last words for us on India's economic future before you go?
Well, I'm very confident about India's economic future. In the last 4 years, thanks to wise and pragmatic policies put in place by Dr. Manmohan Singh, we have shown that we have the capacity to raise India's growth rate from an average of about 5.86% to a new level of 9%. All my friends here have got used to a 9% growth rate and a 30% increase in profit after taxes. Therefore, you see that they've got long faces when it falls to 10 or 12%. But I think this year will be a year in which we will deal with the problems, consolidate, and we'll be back to the high growth rate in 2009-10, at least by the second half of 2009-10. If we have wise and pragmatic leadership at the helm, we will be back to the 9% growth rate.
With that, let us wish you all the best of luck and thank you for your time with us, Mr. Chidambaram. We're going to wrap up over the next 5-10 minutes amid the flurry of the press photographers, because I do, Mr. Kamath, want to ask you about Sensex, and I want to ask you about the equity market, and I want to ask you how much you've suffered, and I want to ask you how much Indians have suffered when the price of Reliance goes down 60% and the Sensex falls out of bed, and I want to ask you how much that stock market will affect the real economy with a negative wealth effect. Sir.
Yeah, I guess that the immediate impact of a drop in the market price is understanding in the mind of the corporate that access to capital is now constrained. I think that is the true impact. The rest of it to me is psychological. And I think we need to really understand what is going to be the impact of that lack of access on their working. To me, this is the simple equation. And let me put some numbers in context. And since we have been talking of a pipeline of investment, and the minister talked of a number, I'll put that also in context. And the number that we have been using is about $700 to $800 billion of actual active projects which are being implemented by corporate India at this point of time. Maybe 40% of that in infrastructure, the rest manufacturing projects. Those projects predominantly we're relying on cash accruals, internal cash generation. To some extent on bank borrowing, some extent on global money, and some extent on equities. To the extent that those projects relied on equity, there will be an impact. But I think that is not going to be of a magnitude which is going to derail projects. And we took a poll just 2 weeks back at a CII National Executive Council meeting, and the question was very simple. Of the industrialists represented here, projects under implementation, which are ongoing, how many of you are abandoning, dropping, postponing these projects? No hand went up. That doesn't mean there is no pain. There is pain. There is loss of confidence, as I said. But the actual fact is investment plans are going on. The number the minister gave is an even more remarkable number, that X number of companies, the figure if I translate to US dollars, a billion, was about 100 billion was the commitment that for that quarter this particular survey indicated was being thought of. But I would think this number will change every day depending on their own working, access to markets and so on. So the final analysis, the capital market becomes probably important to the extent of maybe 20 to 25% of my funding of a project might have come from there. That today is under constraint. So how do I redesign my project? I think that's what's going to happen.
Mm-hmm. And would you say that Indians should expect and hope to get back to their pre-crisis Sensex stock portfolio prices in 3 years, 5 years, or 10 years?
I would look at it differently. I would think that the first objective should be to get back to a growth paradigm of 8% and then take your sights to a 10% growth paradigm, because a year back that's what we were talking about. 6 months back that's what we were confident about. So suddenly you seem to have fallen off a cliff. I think we need to adjust our sights back to that and figure out how to get there. I'm not saying just say that recalibrate and that's what I want to be. You then need to work to get there. And that may take, I think, the next, as the minister again said, 18 months to 24 months. Whether 21 was right or not is speculation. The market itself is speculation. But I would think that if corporate profitability comes back to a level where corporate India continues to grow at 20-25%, then you will have the Sensex at an appropriate level. The appropriate multiple and your profit, and it should be somewhere between where we are today and where it was.
Well, that raises what are probably the last 2 or 3 questions I want to develop in the last 5 or 10 minutes here. For both of you, on the American front and on the Indian front. in 18 to 24 months, getting back to an 8% paradigm of growth in this country strikes me as optimistic. What do you think?
No, I don't think it is optimistic for this reason. That I think what we are probably not reckoning is there is this large pipeline of investment on the ground, and whatever, however conservative you want in terms of working out incremental capital output ratios, that itself is going to provide a boost to the economy. So we're not starting from a zero base. There is a healthy investment pipeline that is going along. And B, I think the factors that again were outlined by the minister. The agriculture sector seems to be doing well, so that will provide you some cushion. That will provide cushion to the rural economy, which is about 40-45% of our overall economy. So that sector gets, and the other factor which I think people are still trying to work out is the knowledge sector, which is dependent on what's happening in the Western world. I think at this point in time, people are not very sure whether the pain felt in the West is going to be good for them, or it's going to hurt them.
Sure.
I think our own assessment is probably, as there is pain felt elsewhere, they will try to be more efficient. That would mean that there's more opportunity for these companies to serve. So I guess that once all this is figured out, you will find that getting back to 8% is not that difficult.
But by 2011
Yes.
as a year rather than 2010.
Yes. 2011, yes.
6.5%, maybe 6.5%, 7%,
Indeed.
and then 2011 is your prediction.
Indeed.
And would you say that for international investors, the most interesting opportunities, and certainly the areas that India needs the most, are investment in FDI terms for infrastructure and energy?
I think the biggest challenge we will have in terms of our overall growth is infrastructure, and within infrastructure, energy. It is, most other areas of infrastructure will be addressed. I think the energy needs, we are at this point in time falling behind, and there's a catch-up to do. So investment would be most welcome in those sectors, and I'm sure the government will come out with policies which attract investment in those sectors.
And Professor, if in India the paradigm we've just discussed is as such, in the US, are we looking at a sharp and painful couple of years, or just 12 to 18 months? And are we then going to be, as some people think, followed by a 3, 4, or 5-year period of stagnation or flatness, like in the early 90s?
I think it really depends on the policy measures taken by the next administration. I can imagine scenarios that would go either way. I think we need much bigger fiscal stimulus than has been talked about, because I think the likelihood that it will be sharp and that the real sector will have big effects over the next 6 to 9 months are palpable. You see this happening sector by sector, month by month, declines in demand. So we need big fiscal stimulus. Larry Summers was talking 2 weeks ago about a $150 billion package. I think that's off by a factor of 5 at least. And so that's 1% of GDP. That is not a big fiscal stimulus. We need something much more dramatic. If we have it, then I think the prospects of a quicker bounce back are pretty good.
Well, as you know, speaking of infrastructure, one of the things the Obama government is likely to do is to use that stimulus not just in the traditional Bush, let me send you a $300 check in the mail to every American way, but in a more Rooseveltian way of what critics would call make-work job creation, and what we could call infrastructure projects so that bridges don't collapse anymore in America, and getting on to more infrastructure and creating jobs on a short-term basis like that. And that itself is a couple of $100 billion worth, isn't it?
Absolutely, and I'm all for it. I think that when Tata and Renault and other companies buy the assets of General Motors, they'll need a lot fewer workers, and those folks can go build some bridges.
Yeah, I think that's absolutely right. Mr. Kamath, as our closing comment, we're going to wrap up. What do you think were the 2 or 3 things that Mr. Chidambaram said which were most interesting to you on behalf of India, Inc.?
I think Mr. Chidambaram clearly put in context what is happening around us, and what he exhorted us is not to have a knee-jerk reaction, to look at things in a calmer, cooler context. I think point is well taken. I think we need to introspect. Clearly, there has been pain in Indian industry with, it's like sudden coming off of what was a steady state equation where commodity prices have collapsed and the rupee has gone from 43, 44 to 50. So you're coming to terms, and I think that that's what's caused this reaction. In another 4 weeks, I think things will be, and I'm with the finance minister on that. I think he also described what he saw as the overall situation in terms of availability of liquidity and what could be done. And there again, we don't need to get to a situation where we need to print money. We have money which, his savings which are with the, for conservative reasons, with the central bank or with the in government securities can be released back to create the liquidity situation. And I think the other message to India Inc. clearly is, you probably will get an interest rate reduction, but you need to also work on cutting your product prices and offering them at a lower rate to the customers so that spurs demand. And I think that point is also well taken. So I think we need to work together with the government. They have shown 24/7 readiness, and I'm happy about it. The Indian industry, I think, will continue to express its pain as we go through the next few weeks or next few months in this global drama. And I'm sure at that point of time we will find the government has responded, Indian industry has responded.
We have 2 more minutes, 2 quick questions. I don't know if Vijay Mallya is with us today. Are you? No. Should the government relax the rules on buying into the airlines industry to help bail him out?
I think it's a larger issue of where to allow FDI and where not to allow FDI. To me, I think that is the core issue, and that's something that the government would need to look into. As part of steady opening up of the economy and the reform process, the government has allowed foreign entry into a wide number of areas, and I think this is the right time to look at what are the areas that the government could further look at, because that will spur FDI.
Right. And finally, if the president of Yale and I were not totally charitable with not our country, but our current failed administration. In this country, and this is really the last question we're going to have, I say this as a friend of India who loves this country very much. Was there a salutary effect of this current crisis for Indians who in the last couple of years have been getting a little bit complacent and self-satisfied about the shining India story? And was there a little bit of a reality check that now we have to work for our money, maybe especially in the property sector in this country?
I think, to be fair to corporate India, because I have seen them now for 37 years, I think of that almost 30 years or 28 years, they were in a cocoon, in the sense that you operated with all constraints, but it was a protected marketplace. It's the last 10 years when they've been exposed to a global marketplace. I think they did remarkably well in the first 5 years. By the time it was 2002 or so, clean up their balance sheets, clean up their factories, get better productivity, quality, cut costs, all those things they did. And that gave them health for the next 4 or 5 years. I think this global crisis, I'm sure, will make them even stronger. Because even before this crisis hit, for the last 1.5 years, I have seen Indian companies start to cut costs, go on another, I would say, efficiency drive, as it were, to be lean and fighting fit. And I think what has happened in the last 2 months reinforces that will of corporate India. So I would entirely agree that out of this crisis, I wouldn't say they were complacent, but if there was complacency, that's banished. But they were fighting to be leaner than what they were, and I think they would have come out now to be true global competitors once they're out of this crisis in the next few weeks or few months.
Great. Good luck to you. Good luck to India. Thank you, ladies and gentlemen.